entries. So let's see. So first of all, you have the euro dollar, and you can see a very impulsive move, breaking this one, and then consolidate right here, and then third wave. Okay, 1, 2, 3. So remember, when it's like 3 waves, I still do the 50% thingy, and this was the entry right over here. And when price came right to here, we actually put on a break even, but thinking that it will just hit here because it's so near here, and it's time to go to sleep actually. And the next day, what happened was that price came down all the way to take it out at break even. So okay, it's fine. But then we had the next opportunity again to take the pound dollar. So after coming down, taking out the lows, what happened was that there was an impulsive move. So what we did was you measure the 50% entry would be right here. So that is a change of character. Earlier one was a break of structure. So 50 here, this time it gave you exactly the 100% mark right here to let me get out at 1 to 1 first. And I broke even the second trade to trail it, but unfortunately it took me out. Okay, so it's fine. Dollar CAD was a bit more fun. Actually, first of all, you can see the impulse move taking out this, right? Then what happened next was that price started to move up and down and creating the 3-wave structure, 1, 2, 3. And then price came back all the way to feel that 50%. And from there, I gave you 1 to 1. And then later on, right up at the here, but the 150% here to give you a 2 to 1 return, okay, for the second trade. So that it was a nice entry. For the pound, this came right after the news, whereby the rate news. So we had the ECB cutting its rates, and after cutting its rates, it came down, and then it's very, very volatile, right? So my trade was triggered here, and after coming up, it swing up. I felt that it's just a bit too volatile with this, so took the trade out. And then you could see it coming down, almost taking off the stop loss right over here before moving up, right? But I just want to highlight, sometimes it's okay if price is just too choppy for you to just get out your trades at given opportunities, and because there's always next opportunity, right? Then we have the Aussie dollar. That took some time, right? And first of all, it felt that the 50% went up, came down all the way here before moving up again. So it took some time before giving you the profit, and that this actually hit the target the next day. Okay, so but right after that, the highest it went was 127, and from there it came down, and because I put the break even here, just took me out just, I think, in about an hour ago on my second trade. So it's fine. I had the first trade taking profit over here. It's still better than nothing. Okay. Then we had the S&P 500 trade right over here at the 5,900 area, remember from the report. So it came down, went exactly to the 50% level, give you a 1 to 1, and then before going back up again to take the trades out at break even, and then coming down again later on. But yet that's usually what you have during a very, very volatile market. So yeah, that's a thing that you need to see. But nevertheless, they do give you opportunities, and sometimes it's a good habit to actually let the second trade run, because if you are working towards a trend, then you can always build this and build this and build this, and then you will have more a higher risk reward ratio, which is good for trading. Okay,